Hi, this is Joe Rabil with Rabil Stock Research. So I want to talk about Bitcoin today. I think there's something interesting developing there, but I also want to go into some of the AI stocks, at least a few of the leading ones, and sort of look at whether they're forming a topping pattern or whether they're setting up for their next buy signal. But I want to start off this video with a lesson on ADX. And while I'm going back to the basics, I'm going to start and show the calculation of it, how it's really calculated, but also what it's telling us and how it can be used. All right. And then I also want to show you when it might not, you might want to avoid it, at least not lean on it as much and maybe look at some other things. So we're going to go through all that and then get through the symbol requests that came through. Okay, I've got a weekly chart of the SPY in place with my moving averages. And I've also got the MACD and ADX. But what I'm going to show and what I really like about what ACP has done is I can go down to the title of this ADX here and just make this box, hit this box, and it'll make it exclusive, meaning it's the only scale underneath price now. All right, so I can get a really clean look at this ADX indicator. Now, the indicator I'm talking about, let's just make sure you know which one it is. There's the ADX line, and then there's the ADX line with plus DI and minus DI. All right. Now, what I'm going to do is I want to go into the settings of what I use. So I want you to understand what you can do is separate out the period of the DI lines, the green and the red, and you can separate out that versus the smoothing periods, which is the blue line, the ADX line. All right. So I wanted to point that out because there's not all software programs will allow you to do that. I think this is a really powerful tool to be able to separate this out. Now, I am going to get into the details of this calculation and everything, but what I want you to understand is that the reason why I like this is that we're taking the 8 and we're using that in conjunction with the 13 DIs. In other words, the ADX is being calculated off of the DI lines. It's not being calculated independently. And that can be really helpful when you're trying to identify peaks and valleys. So I like to use a shorter term ADX because I want to compare prior peaks. Each peak, every time market pulls back and makes a new high, I want to be able to compare that. All right. So I did want to point this out and how easy it is to use in the Stockcharts ACB. All right. Now let's do this. I want to just first take a look at what we're talking about when we're looking at the DI lines. All right. If price is so these are the bars of price, and it doesn't matter what the time frame is. This is in every time frame. It's the same thing. So this is the high and low of a bar. All right. And then we look at the next high and low, the next bar. All right. And the difference is how much are we above the prior high? So this is the high of this bar. How much more upside do we get in terms of the next higher high? So do we make a strong higher high? Do we make a little one? Well, the difference between this peak, this bar and this bar is positive DI for that day or that week or that, whatever the bar is. So if we're looking at a 2-minute chart, this would be every 2 minutes, you'd be comparing each higher high and how strong it is. Now on the decline or the negative side, the negative DI, it's showing how strong of a lower low we're making or how far, how much separation there is between the bars, bar low versus the next bar's low. All right. How much overlapping price do we have? So if prices are staying contained inside of a bar, then we don't have DI in either direction. All right. So we're looking for a directional move. That's why they call it directional in terms of how much upside move are we making, how much downside move. Now, if you notice, I don't even have the closing bars on here. I don't have the ticks for the close because it doesn't calculate into this indicator. We want to know that, and that's why I'm willing to use the ADX in conjunction with the MACD, because the MACD is only using the close. It doesn't care about the high and low. All right. So it's giving us sort of a progression of movement. How far away, how big of a move, how big of a directional move are we making regardless of the close? So even if we close down here, this is going to be considered a bullish or a positive DI day. And if we close here, because there was a lot of downside direction, it's going to be considered a negative DI day. All right. So want to understand that. And that's kind of the key, I think, to getting an idea of this indicator. Now, there's a couple of things we need to recognize. Number one, the green is telling us the strength of the buyers, and the red is telling us the strength of the sellers. So, and the blue line is telling us the difference between the two. So if green is moving up and red is moving down, then the blue line is going to move up because they're separating. The farther they move apart, the farther the DI lines get apart, the higher this will go, the faster it'll move up. Okay. And the same thing holds true as if red is on top and moving higher and green is moving down, meaning the sellers are strong and the buyers are weak, then this line is going to move up. It's a non-directional indicator. It doesn't care about the direction of a market or a stock. It only cares about how strong it is. And strength is being characterized by and defined by the separation between the green line and the red line, the plus DI and the red DI. So if you have a lot of positive DI action and not a lot of negative DI action, then the blue line is going to go up based on the buying. All right. And then the same thing holds true to the downside. Now, I do want to take a minute and just give you a few basic concepts here. If we're moving up based on the buyers, we want to compare. So this is the 25 line. We want to look at every peak in price and see if green, so every time we make a new peak, we want to make sure the green DI is confirming by making a move above the 25 line. If it does, then we should assume upside continuation. If we get, like we did here later in 2021 before the bear market started, you notice this died out. The ADX couldn't get above 25, even though price kept moving higher. It was a major sign, huge warning flare that there was a problem with the trend. The trend was weakening to a significant degree. We want to be on the lookout for those kind of periods. All right. Now, the other thing I think you need to understand about this indicator is where it's weak. And because we're looking at these, we're not looking at closes, we're looking at progression and direction. When the bars are really big, there's going to be a lot of lag. We can see the 2020 low and how long it took for green to come back and get the ADX moving higher. It was all the way here before the weekly ADX was able to turn this around and give us essentially confirmation on an ADX basis. Well, that's really late. So I'm not necessarily leaning on ADX when we get to a low like this, because when the volatility is high, I know there's going to be lag to this indicator. This indicator is going to take a longer time to lag. Now, one of the things we can adjust, or what we could adjust for, is when we know the volatility is high, then we lean a little bit more on the red and the green, the DI, the buyers and the sellers, and we recognize that this line is going to take a little bit longer to adjust. And by doing that, you can see that the red line dropped off pretty quickly, and we had more confirmation that the sellers had really dropped off here by June. All right, so it's not going to be right at the low unless you go down to a smaller time frame. You could go down to an hourly chart, and yeah, you could get a reversal using the ADX, but not using the same time frame. It's not going to be as quick. All right. Now, the final thing I want to point out is what's going on right now. If you notice, we've got a lot of volatility. So if you look at the size of the bars, I track this using the average true range. The average true range is showing right now the size of the bars are very big, meaning we have a lot of volatility, and we're hitting a new high in price, but the ADX is really low. So the question becomes, is this a divergence signal? Is this like what was happening here? Or is it just a sign that there's a lot of volatility and this is lagging? We don't really know. But what I'll tell you is that I'm leaning right now on the DI lines, because if we carry to the upside from here and this makes a higher high, then I think we have to respect, and this red line makes a lower low, then I think we have to respect the fact that we've got good enough momentum confirmation using this indicator, even if the ADX is turning up, but it's low. All right, this might take a little while to get itself going because the volatility is actually high. It doesn't look that high relative to something like this, but I can tell you that it's much higher than it has been for the last year. So we need to know that. We need to probably lean on a couple other indicators right now. And if we can get this DI to confirm, I think that would be a really good sign on this time frame. All right, let's go ahead and move on. If you're enjoying the content, hit that like button and also subscribe. My services can be found at rabilstockresearch.com. I'm on the services page right now. And one of the things I would say is that I've got this advanced trend and momentum courses now separated out. I am offering lifetime access. That's new this year. Also, you can buy them as a bundle at a discount. Now, in terms of what I was talking about with the ADX, I have an extensive ADX explanation, a number of different videos in there in the advanced trend and momentum course. So if you have an interest in that, you can take a look. Also, the individual package, I offer about 2 to 3 reports each week, plus a special video commentary for that package each week. Okay, so before I get into some of the things we talked about, Bitcoin and some of the semiconductor stocks, I wanted to go through the commodities. I haven't done that in a little bit, and I think it's worth updating based on what's taking place. Now, we see what's going on with gold. I mean, there's a lot of strength in the gold area, and look at what silver's doing, reemerging again after a nice little ABC correction, turning back to the upside, and we're seeing the relative strength improve. Look at copper breaking the downtrend line after coming back and testing this major support area. So I think those are all positives. Even if we look at Coco, it looks like it's this is a weekly chart going through a correction. One thing I wanted to point out is what's taking place when we look at this. So one of the things I can do, I can switch this the period from weekly to monthly, and I can apply it to all. So I can just click on this, and then now all of these are monthly charts. All right. Now, I think this is important right now to recognize. Still have a lot of strength here, massive base breakout and big continuation. Look at what silver looks like. I mean, this looks amazing. This is a huge break, came back and tested the breakout area, and now is turning up with the big green bar on the monthly chart. So that's a really good sign. Look at what copper's done. When you put it in this perspective and look at the bigger picture, you see that this is actually pulling back to big support and then turning back to the upside. Yeah, we got a little overdone here when it tried to break out 30, but now it looks like we're forming a higher low at key support. But then when we look at Coco, look at what's taking place here. Monster move to the upside, and we've been consolidating back. We're working off the overbought condition, I think in a very healthy manner, letting this monthly 18 kind of catch up while this works sideways. So big round number, not a surprise to see this take a breather at this point, but I think this is a pretty healthy looking pattern. Now, where the issues are when I go through the commodities, it's not pretty for the ag area. It's just not good action. We're not seeing a turn here at this point. Very premature. Now, where I think it gets a little bit more interesting is when you look at this USO. If you look at what's taking place in the oil, it's really more of a sideways pattern. It's not a true downside breakdown violent. Now, it's not performing well. And if you go through the energy stocks, they're one of the worst performing areas right now in terms of the sector performance. But this is not a true breakdown from a longer term standpoint. It is still a part of a longer sideways consolidation pattern. So I wouldn't totally give up on these. I wouldn't assume that there's nothing that's going to happen with these anytime soon. We just got to keep our eyes open and see if we see some strength coming in, and maybe keep an eye out on the stocks in the energy area that are holding up the best. But right now, the focus should be, when I'm going through commodities, clearly gold, clearly silver, and certainly copper starting to come back in line. And then obviously what's taking place in Coco is on the early side, but still somewhat interesting. All right. Okay, let's switch over. I do want to go through and take a quick look at the QQQ, which has gotten back up and going. Now, one of the signals that I talk about in my course is this reverse divergence pattern. And we can see what's taking place where MACD is essentially working off the overbought condition, but price is being really resilient. So if you think about it, if an oscillator is working off an overbought condition, and price doesn't really go down, what do you think is going to happen when this turns back to the upside? Well, it's probably going to break out. So I think that's a really good indication or signal to be on the lookout for. Now, what's missing is we don't really have strength in the buyers yet. It could, and we have a low ADX condition. It's possible that we spend a little bit more consolidation taking place before this breaks out through the 500 zone. So overall, though, the overall pattern looks okay. Now, what I've been saying is we've lost some relative performance in the way this has played out, but we haven't lost the trend. And as long as the trend is intact above support, then we should assume that at some point this is going to reemerge again. Now, if during this process, if this just kind of falls apart and shows real weakness and comes back down through this prior low, and this starts to deteriorate, then this could turn into something a lot more significant. But we don't have price deterioration at this point. We just have a correction in place. All right. Now, on the other end of the spectrum, we've got this basing pattern in the Russell 2000 that hasn't emerged yet. And until so we've got this relative strength that needs to break out above this prior high and really turn the trend, to shift the trend and have confirmation that the trend has shifted. Before that's going to happen, in my view, I think we're going to need to see strength in the momentum. We don't have a breakout in the momentum yet. We're going to need it at least to start on the daily chart. We need to see some big green bars, preferably get a big green bar on the weekly to show up. And if we get that, then it's very possible we'll get upside continuation and in the DI line, and that'll turn that ADX line to the upside. All right, let's go and take a hard look at Bitcoin, because what's taken place here is not unlike what we were talking about with Coco and some of these others. Notice what's happened here. We had a dynamic move to the upside. And how do I know it's dynamic? Well, MACD from the point of the zero line is making a really strong move away from its signal line. You see the separation there? Very, very nice. All right, now look at what ADX is doing. Look at the strength in the ADX and the green DI. That's showing that the buyers are really strong. And now during this pullback phase, red DI really isn't going anywhere. It's not like it's showing any real strength. The other thing I like to see are these tails forming in the candlesticks, showing that, yeah, we're in the area of what was a sort of breakout area. We're kind of straddling this area, showing that there's still buyers underneath, certainly down in that 50K area. So I like that as an underlying theme in terms of the bigger picture. But look at what's taking place on the weekly chart. We've had our move down, rally up, make a lower high, lower low, lower high, lower low, right? And then this was sort of an undercut pattern. This undercut this low and then made a higher low. We're in the process of sort of turning things around. Now, what will convince me is if we break this downtrend line, notice how the MACD is holding the zero line, and we have a low ADX pattern after a really strong ADX reading. We've been through pretty significant correction phase, and yet the ADX cannot get going. That's a sign that the sellers are not that strong and that the bias is still to the upside. We're waiting for a trend line break, and that's really kind of the sign. Now, you could be on the lookout on a daily chart. You could look for a higher low to form and play this in anticipation of a breakout on the weekly. And the reason is you could accelerate the weekly trend line. Well, yeah, you really can't accelerate the downtrend line, but you can sort of anticipate, because this is strong and because there's no sellers, we can look at this and we can say, you know what, we've broken this downtrend line. We're looking at a 1, 2, 3 potentially. If we get green DI to make a higher high here as it turns back up, I think you could buy this in anticipation of this breakout. But what I'm telling you is that this doesn't look like a topping pattern. It looks more like something that's getting ready to move. All right, let's look at this NVIDIA, because to me, it's a very similar situation. It hasn't been going on as long, but we've got the same situation with these tails underneath suggesting support in place. And it just doesn't look like a topping pattern when I go to the weekly chart. I know there's a lot of volatility in here, but when I look at a pattern like this, normally it'll just have a different feel, a different look to it, and we won't be forming these reverse divergences, but we'll also be forming better red DI. In other words, if we're forming a top, I think we'd be showing stronger red DI, more red DI to the downside. Right now, it's just, yeah, it's volatile. Yeah, it'll probably quiet down before it breaks out again. But I would view this as a constructive pattern and not one that's deteriorating, especially when I look at the monthly tails that have formed underneath and the momentum condition that's in place. Now, look at something like AVGO. I mean, this is in a very, very strong trend, and the weekly chart on this, I think, looks even stronger. We've had We formed almost kind of like a little double top breakout pattern with reverse divergence here. And again, look at the strength on the monthly chart. The tail's underneath, the momentum condition in place. I think we have to respect that. It just there's a lot of good things going on here that I think this is in the process, and it probably needs a little bit more time before it's going to break out. But I think this is in the process of a continuation signal. It's a pause in an ongoing uptrend. Okay, let's look at CEG. So this had this dynamic move to the upside with the big gap. I mean, I think this needs to pull back now. If we get a little bit of a pullback in, closer to maybe 225, 230, 235, something like that, then it might be worth considering just kind of taking off a little bit. There's a lot of attractive utilities worth looking at for sure. And so I don't know that I'd feel like I have to chase this one. If I got a little pullback in some of the stronger utilities, I would have an interest in that. All right, look at GM. GM is actually forming something that looks pretty attractive, but we've got a really key level here at 50. There's nothing to do below the 50 mark. There's not a lot of strength in the sellers. We had good buying pressure, and during this kind of decline phase, the ADX is dropping off. But we need this to break out through 50, and I think if that happens, this could look pretty interesting. It doesn't look like that's going to happen right away, but that would be the area I would be watching. Look at this UMC, United Microelectronics, another semiconductor stock. Look at the monthly holding this this big support area. We need 9 to be taken out. That's how I would look at this. We don't have any momentum strength. We don't have any ADX strength here. We don't have any momentum here, like strength in the momentum here or here. So that means we want to sit back and wait for this $9 number to be taken over. If we do that, I think this could get going. It would look pretty attractive. Okay, look at this Coco. So we've shown some pretty interesting the way this is developed. You almost want to look at it like an inverted head and shoulders pattern, where we formed left shoulder, the head, and then the right shoulder here. It's a little awkward. I mean, we had an extra shoulder over here, kind of had 2 shoulders on each side. But to me, it looks constructive, especially based on the fact that the momentum is strong and the ADX is holding the 0 line, and we're still sitting on the 18-month. Now, when I look at this pattern, you can see the key level is 30. We need to get through 30. We get through 30 on a weekly closing basis, then I think this is starting a move to the upside. Thanks for watching today. If you have any stock requests you'd like me to analyze on next week's show, send it to stocktalk@stockcharts.com. Also, if you want to learn some more about some of the techniques I talked about in the lesson with regard to ADX, you can go to my YouTube channel called Invest Like a Pro. Have a great week. We'll see you next time.